This is your morning brief for Friday, March 15th. Broadcom is up 5% in pre-market trading after their earnings release. Give you a few details. Revenue's up 8% year over year. Earnings per share is up 4.8% year over year. So, on the surface, that's not an amazing. It's not an amazing quarter, warranting 5% higher shares. But I'm starting to warm up to it, actually. It was supposed to be a soft quarter for chips, and a lot of chip makers, are not having great quarters. Considering this was supposed to be that like a weaker one, 8% growth and earnings per share of 4.8%, up 4.8% year over year. That's pretty good. So I did a little video report on it. I'm actually a little more negative in that report than I am at the moment. I just, sometimes your thoughts evolve a little bit, and I'm quite okay with it. I've always liked it, by the way. It's not like I'm completely changing my mind. We own it in some model portfolios, so it's a beauty. Definitely have a look. You'll see the profile in the video report. So go have a look at it. We're still bullish. Ulta Beauty's up 5% in pre-market after earnings per share release as well. So Ulta Beauty's cosmetics company, just a classic return on invested capital company in our profile. We really like this. Shares had come down. I think it was on an earnings report. I'm going to say 6 months ago. 15-20%, something like that, and we were like, that makes no sense, let's go right back in. We did, and we've been rewarded, so feel good about that. And now this earnings report is pretty nice. Year over year, revenue's up 10%. Same store sales is up 9.4%. I think it's a bit distorted though, because they're including their e-commerce as a store, and that's up 25%. So I don't like the way they're reporting that. I think they should just separate that out. Just say same store sales are what they are. It would be less than 9.4% that they're reporting if they took out the e-commerce and then just separately reported e-commerce is up 25%. But that's how they did it. Regardless, it's a good report, and the company looks great in our profile. It's just very consistent and actually improving the return on invested capital just a little bit. Valuation still looks good too, so I really like Ulta Beauty. Okay, Adobe's up 3% in pre-market despite a 25% revenue growth number. And earnings per share also beat, coming in at 1.71 versus 1.61. So why are the shares down 3%? Well, guidance was a little bit weaker, not horribly weak, but a little bit. 1.77 or $1.77 for next quarter versus $1.88 analysts had originally had before the earnings release. I think there's more to it than just this little bit of guidance. The valuation is very, very rich. I mean, it's priced for perfection or even more. Like, I cannot justify it. Stretching assumptions, I can be pretty liberal on assumptions if I need to be, and I really like a company, and I know this is a very exciting company, and I really love it as a company. I just think that the stock itself is just way overvalued, just way. So I do think sometimes when the earnings come out, yes, if you miss and guidance is down, you're going to take a little bit of a hit. But I also think just a reevaluation by some people are just going to go, whoa, this is pretty rich. And I think that's happening. It's hard to say. I can't tell, the minds of all the other investors out there. But it just seems to me that would just naturally happen because it is so rich. But I love this company. I wish I could own the shares just at like half the price or something like that. Okay, futures are up in pre-market trading, so looks like we're going to end the week on a good note. It was actually a fairly decent week, so that's good. And I just want to say happy St. Paddy's Day to everybody, and be safe over the weekend. And let's go find some gems.